Hey everyone, and today we are going to talk about two companies that from their recent filings seem to have a good potential ahead. The first one is a highway maintenance specialist that has clinched a 100 crores order in Andhra Pradesh, and the second company is a Mumbai-based real estate developer that has expanded its footprint at NM Joshi Marg by merging a fresh land parcel into its upcoming project, boosting its GDV to 130 crores. So basically, both the companies are expanding steadily. The first one is building scale through government-led orders, strong order book visibility, and opportunities across highways, smart cities, and infrastructure projects. And the second is the scaling through asset-light expansion, premium positioning in high-demand city locations, and long-term target of projects and revenue growth. So welcome to another episode of Noisemaker, where we keep things simple and talk about companies that may not always come in the spotlight but have a strong potential for future. I am Saijal, Equity Research Analyst at Desvelado Advisory, and today we'll be talking about two companies that are making solid progress in their business. And if current trends continue, they might keep growing even further. But before that, here is a quick disclaimer. Any discussion, facts, or writings provided here are for informational purposes only and do not constitute any buy or sell recommendation. So please conduct your own due diligence before making any investment decision. Now let's move to the first company, Markolines Pavement Technologies Ltd, which provides highway operations and maintenance services. Recently, the company secured 100 crores order from Trans Metalite India Ltd for patch repair work in Andhra Pradesh, which is to be executed over 5 years. With this, their unexecuted order book rises to around 400 crores, and coupled with over 600 crores of project in the pipeline at various stages of finalization, the company has strong revenue visibility for the next 12 to 24 months. Successful execution of this order, along with a focus on higher margin specialized construction projects, will deliver 18 to 20% margins versus 12% in major maintenance. It could help them achieve their 1000 crores milestone within the next 3 to 4 years. Also, the company aims to reach a balanced 50-50 split between specialized and major projects within a year. Now, Mudit will be joining in for more. So, Mudit, how do you see this order and higher margin focus shaping Markolines' growth trajectory?
Thank you, Sejal. What stands out is the company's ability to combine the strong order visibility with improved profitability. The FY25 revenue declined 11.5% year on year to 307.4 crores, but the H1 FY25 was weak at 105.8 crores, which is say like down by 51 minus 1%. And we talk about the H2 FY25, then it showed a remarkable rebound with revenue up 90.5% H on H to 201.5 crores. EBITDA rose from 35.4 crores to 44 crores, lifting margins to 14.3%, and the net profit improved 31% year on year to 22.7 crores, with the net margin expanding to 7.2%. The thing is that its net profit alone was 18.1 crores, giving an 8.8% margin. This shows operational resilience and sets the stage for the FY26. Cecil, with the merger of Markolines Infra and the tunneling expansion, how do you see the company positioning itself for the larger projects and the geographic growth?
Absolutely, Mudit. I think the planned merger of Markolines Infra, which had 133 crores revenue and 12.29 crores PAT in FY25, with Markolines Pavement Technologies, is expected to drive consolidation, optimize operations, and enhance the tender eligibility and strengthen the market presence. And on top of that, tunneling projects in Maharashtra and Jammu and Kashmir worth about 300 to 350 crores, with at least one more planned in FY26, will enhance their position in specialized construction and enable the bids for larger projects above 500 crores. And this also opens geographic growth into the Northeast India as new road networks develop. Also, Mudit, with these strategic initiatives, how do you see Marcoline balancing growth and profitability in the next few years?
Okay, I would say these moves create a strong platform for sustainable growth. By combining higher margin specialized projects, the edge to momentum, and the robust project pipeline, the Marco lines can drive both revenue and margins. The merger and tunneling expansion provides scale, operational efficiency, and eligibility for larger contracts. The thing is, if the execution remains disciplined, right, The company is well positioned to hit its 100,000 crores milestone while strengthening its leadership in specialized highway and infrastructure projects, making it a strong player in both the growth and the profitability.
Okay, thank you, Mudit. So now let's move to the second company, which is Suraj Estate Developers Limited, which is a real estate construction company focused on residential and commercial projects in the south central Mumbai region. And recently, the company acquired 644 square meter land parcel at Joshi Marg, Lower Parel, for 6.4 crores, and this will be merged with their upcoming Ambavat Bhavan project, taking the total land size to 1,310 square meters and lifting the project's gross development value, which is the GDV, to about 130 crores. And the move not only consolidates the prime land parcels but also unlocks better layout, ensures wider frontage, and enhances the market appeal in the value luxury segment. And when upcoming projects with a GDP of over 5,000 crores, including 1,600 crores worth of launches in H1, such as a 1,200 crores commercial project and a 250 crores residential project, it shows strong scaling trajectory. And they even have a 800 crores expansion planned at Marinagar. So, Mudit, how do you view this aggressive expansion strategy of the company?
Right. Cecil, so to me, this aggressive scaling underlines the Suraj Estate's ability to consistently build growth visibility. The NM Joshi Marg consolidation strengthens their value luxury portfolio, but the bigger picture is the 5,000 crore pipeline, which ensures a multi-year launch runway. Now, if you look at the financials, the 25 was robust. The revenue jumped 33.2% year on year to 4 to 549.1 crores, with the strong Q3 momentum at 169.8 crores. Although the Q2 and Q4 were softer. If we talk about the early FY26, then it started at around 132.5 crores. So there's some near-term moderation. The EBITDA stood at 206.7 crores, and lower than 236.4 crores in FY24, with margins normalizing to 37.4%, and from say like a higher base of 56.9%. But the net profit surged 48% year on year to 100.2 crores, with the net margins improving to 18.2% from 16.4%, thanks to the stronger bottom line efficiency. Still, given this mix of top line growth and margin moderation, do you think Suraj Estate can sustain both the scale and the profitability in FY26?
A great point, Mudit. I think the revenue trajectory shows strong scalability, and while the margins have moderated, the net profit expansion shows financial discipline as well. And the key will be execution of upcoming launches like the 1,200 crores commercial project and keeping the cost pressures in check. Now, what also works in their favor is the demand resilience in the value luxury housing space, especially for the 1 to 2 BHK homes, which aligns perfectly with a large part of their upcoming projects. Now, this demand ensures smoother cash inflows, timely project execution, and more stable revenues, even if the broader real estate slow down. But Mudit, how do you see their redevelopment push in the micro markets like Prabhadevi and Bandra, shaping the company's long-term visibility?
Right, that's a really good question. I think that's a critical growth lever. Ongoing talks with societies in Prabhadevi and Bandra could give them access to high demand micro markets, which could not only add to their project pipeline but also diversify their portfolio into premium in demand clusters. Combined with the already strong 5,000 crores GDV pipeline, this creates a multi-year visibility and a steady flow of cash inflows. So if we talk about in some regions, Suraj Estates developers is positioning itself well by consolidating the land parcels, scaling aggressively with high GDV launches, expanding in the value luxury housing, and tapping redevelopment in prime macro markets. The thing is, if execution stays disciplined, right, then they are well set to sustain growth and strengthen the profitability over the next few years.
All right, Mudit. Thanks a lot. That really helped us to understand the direction both these companies are moving in. So now let's take a quick look at how some of our previous picks have performed. So first we have InfoBeans Technologies Limited. We picked this up at 524.9 and it's now at 688.5, giving a return of 31.2%. Vintage Coffee and Beverages Limited. We picked this up at 149.9 and it's now at 151.3, giving a return of 0.9%. Mastek Ltd, we picked this up at 2,547 and it's now at 2,603, giving a return of 2.2%. Suprajit Engineering Limited, we picked this up at 468.1 and now it's at 451.1, which is a decline of 3.6%. And lastly, we have is Vimta Labs Limited. We picked this up at 481.5 and it's now at 647, giving a return of 34.4%. Overall, a pretty good mix of gains, and we'll continue to monitor all these companies closely to see how they shape up in the coming quarters. And here is the QR through which you can access all these companies which we covered recently. Now let's move to the summary of today's company included in today's Noisemaker. Markolines Pavement Technologies Limited, which has secured 100 crores order from Trans Metalite India Ltd for patch repair work in Andhra Pradesh, which is to be executed over 5-year time span. Suraj Estate Developers Limited, which has recently acquired 644 square meter land parcel at NM Joshi Marg, Lower Parel for 6.4 crores, which will be merged with its upcoming Ambavat Bhavan project. So that's it for today's edition of Noisemaker, and if you found this breakout informative, you can scan the QR code to read the full report, and we'll be back soon with more simple and clear market updates. Until then, stay curious, stay ahead and stay informed.